We just got a new housing market report which says the housing market is booming faster than expected, but there's a catch. Here's the title from CNBC, quote, February home resales jump much more than expected despite higher mortgage rates. Now, if you want to read it for yourself, I'll link it for you down in the description. But the National Association of Realtors reported that the sale of previously owned homes jumped a lot more than expected in February. In February, it was expected that previously owned home sales would drop by 3%, when in reality, they went up. So a lot of people were saying, hey, this is really good news. The housing market's booming. But there's a catch. The catch is that sales in February, which were much higher than expected, were lower compared to February of last year. And this is where we're starting to see still a lot of confusion about the housing market, especially when it comes to pricing and affordability. Here's what the chief economist at the National Association of Realtors had to say. Quote, home buyers are slowly entering the market. Mortgage rates have not changed much, but more inventory and choices are releasing pent-up housing demand. What is the problem that we're seeing in the housing market right now? Inventory and pricing. There's still not enough inventory out there. Now, if you've been watching my channel, you know that recently I put out a video talking about home builders. And in February, we saw home building starts jump. But at the same time, home builder confidence is also falling due to concerns about tariffs and the economy. And the reason why this matters goes back to real estate economics. You're going to be very tired of me talking about this after some time, but supply and demand. This is what dictates the price of any asset, real estate, stocks, gold. When you have more buyers than sellers, this pushes the price of an asset up. When you have more sellers than buyers, this pulls the price of that thing down. Well, today, according to the report, we still have not enough inventory. We still don't have that many homes for sale, although it is more than what we had 12, 24, 36 months ago. It's still not enough. And this is what's keeping home prices still very high, especially for higher priced homes. And until we start to see more inventory, well, it looks like there's going to be a lot of upward pressure still on home prices, because over the last 12 months, although we haven't seen a huge boom in housing demand, because home sales are still lower 2025 February than they were in 2024 February, home prices are still going up. Over the last 12 months, we have seen home prices rise by around 3.8%, while mortgage rates have stayed around the same. Why does this matter? Because as more buyers are entering the market, people are saying, I don't know if mortgage rates are ever going to go down. I don't know if we're going to see 4% mortgage rates again. A lot of buyers are starting to say, okay, I guess I'll just have to buy now so I don't have to keep renting, so I don't keep waiting. Well, as these more buyers are entering the market, we are starting to see some more inventory, but not fast enough, which is why home prices keep rising, which starts to create a little bit of a dilemma based off of what's happening in the economy right now. You'd expect that if there's more buyers coming in, builders would be building more homes. But what we're seeing based off of the data today is that home builders started more homes in February, which is good. But we don't know what they're going to be doing in April, May, and June, because there's concerns. There's concerns about the economy, there's concerns about tariffs, and home builders ultimately need to feel confident in their ability to generate a profit from their builds, from their subdivisions, from their neighborhoods, from their apartment complexes, for them to go out and do it. And so the question ultimately becomes, are we going to see more homeowners sell their houses? Because if that happens, then that can boost inventory. And there are two reasons why a homeowner could sell their home. One is voluntarily, the other is involuntarily. And this is something you want to understand the distinction for, because when you start to see more involuntary sales, well, that definitely pulls home prices lower. Now, these are things we've all covered in Market Briefs. Market Briefs, again, is my free financial newsletter, where every day my team is breaking down what's happening in things like the housing market, the stock market, crypto, our economy, and the global economy into a fun and witty and easy to read newsletter. It's completely free. We have hundreds of thousands of investors that read Market Briefs every single day. So if you have not joined Market Briefs yet, I have the link for you to join down in the description below. So what's going to entice a homeowner to sell their house? Well, a voluntary sale is, I made money and I want to sell, I have to move, or I just want to upgrade or downgrade, so I'm going to sell my house. Pretty self-explanatory. The problem with these voluntary sales is the vast majority of homeowners today are sitting on a house with a sub 5% mortgage, meaning a mortgage that's at 2.8% or 3.5%. And so when you're a homeowner sitting on a house with 3.5% on your 30-year fixed rate mortgage, you don't want to sell, because then you'd have to go from your 3.5% mortgage to a 7% mortgage or a 6.5% mortgage. And that could be a big jump, especially if you have to borrow a lot more dollars to buy a new house. So unless there's a real need, a lot of homeowners are saying, well, I don't want to sell because that's going to be too expensive. That's the first problem. The second problem is, well, people are not sure what's going to happen in the economy. We've started to see more concerns about recessions and concerns about tariffs and all that. Well, the reason why that matters is because when people are not confident in what's going to happen in the economy tomorrow, they're less likely to make a big financial decision, whether it's buying a house or selling a house. So that's the voluntary sales. Involuntary sales are foreclosures. And this is essentially now, you can't make your payments. You are struggling to continue living in this house, so you have to sell. Maybe the bank takes the home back from you, or you're forced to sell because of your financial circumstances. And the reason why this is interesting today is because, yes, we are starting to see more Americans that are having financial difficulties. Like, take a look at the credit card numbers. Credit card debt keeps breaking all new record highs. Auto loan delinquencies are breaking multi-decade highs. We are seeing more Americans that are running into financial troubles. But the unique situation today versus, say, the 2008 housing market crisis is today, if you lose your job or you run into financial problems and you can't make your mortgage payment, well, you don't really need to be foreclosed on, because you can generally just sell your house. And because home prices have gone up so much over the last few years, you might be able to sell your house for a profit, or at least break even, depending on when you bought your house. So we haven't seen that big surge in foreclosures due to that. Have foreclosures gone up? Yes. If you go and read the headlines, they will tell you that foreclosure rates are rising at some of the fastest rates we've ever seen, which can make it seem very scary that we're going to see this big foreclosure crisis. The flip side to that is we had zero foreclosures in 2020, 2021, 2022, because the government had stopped all foreclosures. And so when you go from zero foreclosures to even 10 foreclosures, it looks like a big run up, because, well, that's just, 0 to 10 is a huge run up. But the nominal number, the actual number of foreclosures that we're seeing isn't anything that really is creating any sort of concern just yet. But if we start to see more slowdown in the economy, which even the White House has said that we could potentially see a short-term slowdown in the economy, if we see a slowdown in the economy in the short term, that could impact the housing market, because, of course, a slowdown in the economy would mean that we'd see layoffs. We'd see less people have jobs. If less people have jobs, that could impact people's ability to pay their mortgages. And if we see a larger surge of people unable to pay their mortgages, well, then that could create a shakeup in the housing market, because that could mean that more people then are forced to sell. Maybe people want to sell because they can't make their mortgage payments, or maybe people get foreclosed on, which could then increase the supply of houses. If we see that supply of house increase, well, now the question is, what's higher, supply or demand? If we start to see supply outpace demand, which we haven't seen happen in a long time now, but if we start to see supply outpace demand, then that could pull housing prices down. The problem with that is, of course, the demand side. We still have so many people that want to buy houses, that feel priced out of the housing market. And if these people continue to keep their jobs, then they will want to buy if they see any opportunity. That's been the dilemma that we're seeing right now, is anytime you see any break in the housing market, anytime you see mortgage rates fall a little bit, anytime you start to see any of that kind of cooling, home buyers jump back in, and then home prices shoot back up. We saw a little bit of a cool down over the winter months, which is very kind of normal, seasonal. And then February, home sales boomed as people wanted to take advantage of that opportunity. So that's kind of the dilemma that we're facing right now, that we're still facing the shortage of supply. Builders are building, but they may not keep building. We don't know what's going to happen with that just yet. We'll be keeping you posted in market briefs and here, but based off of the information that we have today, we are starting to see more builders saying we don't want to create new builds until we know what's going to happen with tariffs and the economy. So more and more builders are starting to kind of cool off a little bit on that. We don't know exactly what's going to happen with supply because there's concern and uncertainty with mortgage rates. We also don't know what's going to happen with demand because we don't know what's going to happen with the economy. So what does all this mean? That there's a lot of interesting things happening in the housing market, but the place where there's the most certainty in the housing market are expensive homes. What we saw is that sales on expensive homes that are above $750,000, were continuing to rise at the fastest rate, while sales for median priced homes, $300,000-$400,000 homes, were down 3%. So people are still buying the expensive houses, the $1 million houses, but the more median priced homes are not seeing as much growth like they were before. So people with money still got money, they're still spending. The average person, well, maybe not so much. What are your thoughts on the housing market? Are we going to see a cool down later on in 2025, or is it going to continue booming? Let me know down in the comments, and of course, we'll be keeping you posted here on this channel, and I'll be keeping you posted on market briefs as well. So I'll see you on YouTube Monday.